Global energy cartels control critical crude oil pipelines to dominate international markets. Controlling physical extraction infrastructure guarantees permanent pricing power over modern industrial economies worldwide. Sovereign energy conglomerates manage massive supertanker fleets across strategic maritime choke points. Controlling key shipping routes allows cartel executives to manipulate global energy supply during geopolitical crises. Sovereign oil ministers meet secretly inside high-security private facilities to set export quotas. Coordinating global production levels, Artificial maintains elevated prices, generating trillions for state treasuries. When supply disruptions trigger severe market panics, energy monopolies generate unprecedented windfall profits. Those who own essential fuel infrastructure dictate economic terms, while dependent nations suffer inflation. Petroleum geologists utilize advanced subterranean mapping technology to locate deep strategic oil reserves. Securing long-term resource concessions ensures continuous cash flows for major energy dynasties over decades. Liquefied natural gas conglomerates construct massive export terminals near strategic commercial ocean ports. Controlling processing facilities allows private monopolies to squeeze international utility markets during winter months. State-owned energy firms protect subterranean strategic petroleum reserves inside heavily fortified military zones. Safeguarding physical fuel stockpiles provides ultimate national economic leverage during global embargo events. Corporate energy lobbyists secure exclusive extraction rights by financing key political campaigns worldwide. Establishing favorable regulatory frameworks prevents competitive market entry and preserves monopoly profits. Commodity trading desks calculate complex refining margin spreads using automated high-frequency trading algorithms. Optimizing crack spreads guarantees immense financial profitability regardless of broader macroeconomic downturns. Industrial fuel transport networks deliver refined petroleum products directly to essential municipal distribution hubs. Controlling downstream logistics prevents regional market competitors from undercutting established prices. Nuclear utility cartels acquire long-term uranium enrichment assets to dominate regional power grids. Securing specialized nuclear infrastructure ensures continuous cash flows through severe long-term economic shifts. Maritime logistics executives route massive natural gas supertankers away from price-capped domestic markets, shifting physical supply toward high-margin foreign destinations, maximizes corporate profitability during energy crunches. Corporate risk officers simulate severe global oil embargoes inside secure financial situation rooms. Preparing contingency supply channels protects energy conglomerates from sudden cross-border trade route blockades. Geopolitical advisors monitor critical pipeline transit corridors using real-time satellite threat telemetry. Early security deployment prevents hostile state actors from disrupting lucrative multinational fuel deliveries. Energy hedge fund managers accumulate long crude oil futures contracts before public cartel announcements. Insider market awareness yields massive investment returns during sudden geopolitical supply disruptions. Venture capital firms acquire vast lithium evaporation basins to monopolize next-generation battery manufacturing. Controlling critical raw material supply chains dictates terms to future electric vehicle manufacturers. Electrical power grid operators manipulate regional power dispatch rates during extreme heatwave demand spikes. Artificial grid congestion drives wholesale electricity spot prices to historical record high levels. Cross-border natural gas pipeline consortia draft exclusive bilateral supply agreements with sovereign governments. Long-term take-or-pay contracts lock in multi-billion-dollar recurring revenues for energy barons. Sovereign wealth funds allocate massive capital pools directly into cash-flowing energy royalty trusts. Collecting steady resource dividends protects state wealth portfolios against severe global monetary inflation. Energy cartel legal teams aggressively defend key extraction patents against competing technology firms. Securing proprietary drilling intellectual property deters ambitious corporate challengers from entering lucrative markets. When global energy crises strike, pipeline owners stand completely untouched by broader financial distress. Controlling essential physical infrastructure guarantees permanent economic dominance across all market cycles. Utility treasury executives secure fixed long-term power purchase agreements with massive industrial clients. Pre-selling power production protects corporate earnings against short-term commodity price volatility. Private intelligence agencies investigate foreign maritime supply chain bottlenecks for energy trading firms. Uncovering hidden port delays allows insider traders to profit from localized fuel shortages. Energy cartel CEOs gather in remote luxury retreats to set international export pricing benchmarks. Coordinating global pricing strategies prevents destructive price wars between major oil-producing nations. Macroeconomic analysts evaluate trade sanction impacts on global oil vessel routing pathways. Capital shifts toward dark fleet operators capable of circumventing international energy embargoes safely. Cybersecurity engineers harden smart power grid control nodes against sophisticated state-sponsored cyber attacks. Protecting critical utility infrastructure guarantees continuous operational uptime during geopolitical conflict. Bespoke energy tax attorneys utilize foreign depletion allowances to minimize corporate tax liabilities. Compliant international tax planning maximizes net capital retention across multinational energy operations. Pipeline operations teams activate redundant pumping stations to maintain uninterrupted oil throughput rates. Continuous pipeline flow ensures uninterrupted contract fulfillment during major facility maintenance periods. Quality control chemists verify refined jet fuel chemical specifications using advanced lab spectrographs. Certified fuel quality guarantees premium pricing contracts with major commercial airline fleets. Resource strategists structure joint venture agreements for deepwater offshore oil exploration blocks. Sharing capital expenditure risks preserves treasury balance sheets while expanding massive reserve portfolios. Commodity options traders purchase long-term crude call options to capitalize on sudden supply shocks. Hedging supply tail risks allows energy desks to generate immense trading revenues during market panics. Subterranean gas storage operators store immense natural gas reserves inside deep underground salt caverns. Withholding physical reserves during summer allows cartels to inflate winter natural gas prices. Corporate delegations secure bilateral energy transit treaties with key transit nations across Eurasia. Establishing legal corridor protections prevents foreign governments from seizing valuable transit pipelines. Utility compliance officers enforce strict environmental safety standards across regional power subsidiaries. Flawless regulatory compliance prevents expensive legal shutdowns and protects long-term operational licenses. Dynastic energy patriarchs transfer multi-billion-dollar power grid assets to trained family successors. Structured legacy trusts preserve family corporate control across multiple generations of energy dominance. When rising fuel costs cripple consumer budgets, energy conglomerates record corporate profits. Strategic infrastructure ownership converts widespread economic panic into unprecedented private capital expansion. Energy conglomerate directors approve multi-decade infrastructure investments with senior sovereign partners. Rigorous capital modeling ensures sustainable royalty cash flows through future economic depressions. Global capital flows continuously toward essential energy assets during severe macroeconomic downturns. Ownership of unencumbered physical fuel infrastructure guarantees permanent dominance in any global economy. Building an impenetrable energy monopoly requires immense capital investment and political foresight. Sovereign resource control guarantees your legacy endures across all global economic cycles. The stoic energy tycoon watches the sunset over his massive coastal oil refinery complex. His empire is legally protected, physically secured, and permanently essential to modern civilization.